Hello, everyone. Happy new month to you, and welcome back to another episode of our weekend market analysis series as we prepare for the new week. So, in this video, we are going to be revisiting the XAUUSD chart as we saw gold hit another record high at the $2,790 area. Now, the structural pattern you see on your screen right now was actually our trading setup prior to the beginning of last week, where we were able to identify some interesting levels and structures to guide our decisions from last week. And one of the key structures we did saw was the key level here at the 2720, which was serving as a robust demand zone in the last couple of weeks. And of course, the identification of this descending trend line also help us to capture that uptrend move. And look at what happened at the beginning of last week. We saw continued buy pressure around the 2730 level, giving us a platform to continue that 600 pips move all the way to that record high. And of course, during the second half of the week, we were privileged to jump into this bearish momentum at the breakdown of the $2,777.50 level. Though I wasn't able to capture the whole length, I was taking out around the 2,750 with about 270 pips in profit. And after that move, we saw a little bit of choppy condition as price of gold went through some volatility on the last trading day of last week. Initially, it spiked into the 2,760 dollar area on a weak US non-farm payroll report, which showed only 12,000 new jobs in October, which was way below the 113,000 that was actually expected. However, it couldn't hold these gains and it dropped to the 2,740 dollar area as the day unfolded. And this could probably be as a result of profit taking activities ahead of the weekend, especially in an era where there is uncertainty in the Middle East. If you want to have a look at a detail into each of our entry points, I've left a link to the breakdown of this in the description below for educational purposes. So, as we move on to the upcoming week, how are we preparing and what is really going on in the market? Well, from last week Friday, we saw that there was a mixed data that followed from the US Institute of Supply Managers, which seems to have added a little bit of pressure into the gold market. We saw here that there was a drop in the manufacturing PMI to 46.5, signaling a decline in activity. Yet, on the other hand, the prices paid index jumped to 54.8, suggesting inflation might still be in play. Now, this inflation hint could keep the Fed from cutting rates as aggressively as some have expected, which in turn could weigh on the price of gold. Now, other parts of the NFP report also showed that unemployment rate stayed steady at 4.1%. Wages and hours worked ticked up also a little bit. Now, this paints a mixed picture for the Fed, but could ultimately support the case for maintaining rates, which impacts gold as a non yielding asset. Now, finally, demand for gold also have been strengthened on safe haven flow. We have renewed tensions in the Middle East and uncertainties around the upcoming US election, which has driven investors back to gold. So, with all of this information, how is the market digesting the implication of all that has happened while taking into account upcoming economic events ahead of the coming week? As always, in this video, we will be breaking down the key levels for next week, identify potential market trends, and structural patterns that will set up trading opportunities for us. But before we begin, I want to emphasize that this analysis is designed for educational purposes only and not financial advice. So make sure to consult with a financial expert before making any investment decisions. So, with that said, let's jump right into the chart and see what the week ahead has in store for gold. Now, my first point of contact today will be on the 4 hours time frame. But before I go into that 4 hours time frame, let's take a quick look at the economic calendar. This economic data, of course, the fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the asset we are monitoring for next week, which is gold, we will be focusing on high impactful event from the United States economic docket. Now, the first impactful event will be coming in on Tuesday, November 5, and the first one here is the major one for next week, which is the presidential election. Then on that same day, we will be looking at the ISM Services PMI, a data that measures the performance of the service sector in the United States. Then on Thursday is another important event, which is the Fed's interest rate decision. This is the outcome of the Federal Reserve's meeting where they decide whether to change or maintain the current interest rates. Then on that same day, simultaneously, of course, we will be seeing the release of the monetary policy report. For those who don't know, this is a comprehensive assessment provided by the Fed detailing the economic outlook and the rationale behind monetary policy decisions. Then, 30 minutes afterward, we will be seeing the Fed chairman communicates to the media talking about the central bank's monetary policy decisions, economic outlook, and of course, answer questions from the media. Now, finally, on Friday, November 8th, is the publication from the University of Michigan, and that is the Consumer Sentiment Index. It measures how optimistic or pessimistic consumers feel about the future of the US economy. So, these are the major events we're looking forward to, and of course, we do understand that the anticipation of this event will um, result into some structural details that we can see on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I was able to identify a simple trading setup after taking into account the character of price action since the beginning of the month of October. And if you look at this very well, you will see that the market has been on a strong bullish momentum. And in fact, I have multiple ascending trend lines here that we will be using to navigate this current market dynamic next week. Now, the major ascending trend line we have here is right here, starting on the 1st of October. And look at how price action had consistently respected that trend line. Look at it here. It was in selling niche at some point during the second week of the month of October. And since price broke out of this structure on the 18th of October, we have seen that price had maintained its momentum above the structure, giving us a clear insight into the strength of the buyers in this market. Now, look at what happened on the during the second half of last week. We saw here on Thursday, buy pressure resumed from here. The same thing happened on Friday. We saw how price closed exactly along that ascending trend line. Now, the question as we head into the new week is whether this ascending trend line will continue to hold this momentum or it's get to get breached and broken to the downside. Now, to help us understand what is going on here, let's zoom into the scoring structure as I have a couple of multiple levels, in fact, that will be helping us navigate the structure. Now, my key level for next week is going to be around the 2740, a level which shares a confluence with that ascending trend line. As you will see, price action closed exactly around this area. Now, will this level be a buying niche for next week or will it serve as a short term selling opportunity? So, with the situation we have here, I want to see how the market will react to this confluence at the beginning of the week, where the appearance of continued buy pressure could give us an opportunity to continue the uptrend move. And of course, we have multiple levels here that could help us maximize the potential of that bullish move if they get broken to the upside. So we have levels like the 2758 and of course the 2790 area to maximize that bullish move if price action ever breaks out of that structure. However, if that is not the case at the beginning of the week and instead we see price action continue to find selling pressure below the ascending trend line and that key level at the 2740, this could incite some short-term selling opportunity, I will say, maybe back into one of these trend lines that you see here, which interestingly shares a confluence with this demand zone around the 2700 and the 2710 area. And if we look at the distance between the 2740 and the 2710, we are looking at a minimum of 300 pips to a maximum of about 400 pips if price action reverses from this area to continue the uptrend move. But when we get there, we will know what to do depending on how price reacts to that level. So, with the information we have gathered here, you would agree with me that we are at a crucial juncture that is around the 2740, where depending on how market participants react to the structure to this confluence at the beginning of next week will determine if we are going to be buying or selling from this particular area. But trust me, I will be with you in the comment section of this video to give us an update on what I think will happen after monitoring price action around this area during the early hours of next week. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, wicked market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.